Are you ready for a no-deal Brexit? Parliamentarians are voting on it today.
Guy, we are. We built our model on the assumption that we wouldn't know the shape of Brexit. We knew the timing. So the only 4/5 of our earnings are outside of the UK. Our business that's most impacted by Brexit would be the European sales of M&G Prudential, our domestic asset manager. And we have replicated its funds in a Luxembourg set of CCAVs, and that is our Brexit contingency, but it's also strategically gets us closer to our European clients. So we're ready.
Mr. Wells, the chairman of the Royal Bank of Scotland a little earlier on today was talking about the fact that fish rather than finance seemed to be higher in mind when it came to the government, when it came to the Brexit issue. Would you agree with the chairman of RBS on that?
Well, the chairman of RBS is also the chairman of our risk committee, so I'm going to not publicly debate him. I rate him seriously. I think there's the city's natural capabilities. I think give it momentum in the Brexit discussion. And there's strengths that the city has that can be negotiated before or after. But I think the relevance of London as a financial market, the rule of law, the depth of markets, the depth of talent, you've seen since the announcement, that really hasn't been eroded. If it has, it's just barely at the edges. So I think the timing of the negotiations on the impact of the city can wait a bit if they need to. There's some clarity, but clearly, the government has to solve the big issues, and then the industry by industry have to wait for their turn.
Mike, you say you've built your model on the assumption that we won't know what the shape of Brexit is for a while. What is the strategy, the medium-term strategy, the 5-year strategy for Prudential?
So the key for us on the strategic side, one, continue the profitable growth that you saw in today's numbers. And build out the capabilities we need in the various markets to compete with current challengers and some of the new challengers. I think on the strategic side, the largest thing we're doing is separating our UK M&G Prudential businesses away from our international business, which would become Prudential PLC. And that's quite a material move for a 170-year-old firm, and we're well progressed in that. But that's not Brexit related. That's simply these businesses have all grown in size and difference in characteristics, and it's a strategic move we would have done with or without Brexit.
Who do you consider to be your immediate competitors now, Mike?
I think our AIA in Asia is probably our closest competitor. I think the UK businesses are unique in that they have attributes no single competitor has. You have a very good fund complex in M&G, a very unique with profits product that had 8.5 billion pounds of inflows last year. To give you an idea, its position in the market with Prudential. And the combination of the two gives it products from annuities to the historic back book, to just about every wealth product, including some competitors can't replicate. So I think their position is quite unique.
Mr. Wells, as you say, the big strategic decision that you have made is to go through with this demerger. Some of the comments I read a little earlier on from some of the analysts suggested that there's still a little light on the details as to how that is progressing. Are you on track? Is that delivering what you would expect in terms of the timeline?
So we are on track. There's some material steps left, including regulatory and board approvals. We still have to finish assembling. We've hired Mike Evans as the chair of the new M&G Prudential. He and John Foley, the CEO, are assembling their non-exec directors. There's some balance sheet work to do. There's some regulatory work to do, both with the international business, with Hong Kong as our regulator, and domestically here with Bank of England as a regulator of M&G Prudential. The lens here is quality, not time. But a disproportionate amount of the work is accomplished, and we're very happy with where we are, having announced just a year ago that we'll get this done in a timely fashion and create two very high-quality companies.
Mr. Wells, the Chinese markets, the Chinese equity markets have bounced back very, very strongly on what looks like a kind of low base, but also a complete change in terms of the way that the Chinese authorities are viewing the market. They are encouraging margin trading, etc. That's producing quite a lot of volatility over kind of a one-year period. As a big, effective asset manager, are you comfortable with that kind of volatility? Are you comfortable with the way that the Chinese are managing that market?
Well, I am. I think it is a developing market as in terms of an equity market goes. You know, the nature and structure of the individual stocks, ownership percentages, and again, these are changing globally. You have you have different voting shares and rights appearing in the U.S. and Western markets as well. But it is a maturing market, and it's maturing quickly, like everything else in China. I was in December in Shanghai. We opened up our own wholly owned foreign enterprise, Wolfie. Our ability to fund manager to manage money for Chinese institutions and retail clients, and we're running that with our eSpring team, which is one of the largest asset managers in Asia. I am comfortable with it. I think the direction of travel is strong.
Mike, what are your clients bringing to you as major concerns?
Mostly it's political. I mean, we are disproportionately dealing with middle-class clients, and I find myself saying this more than once sometimes. Most middle-class consumers can't tell you GDP in their country, but they can tell you if they're confident on politics, if they're confident on just the feel of the economy. They don't put a number on it. So our business is the risk-off products. Where will they go when they're concerned? So, in a sometime odd way, we're benefactors of this. You asked about China. With all of the political noise around China and U.S. trade and things, our sales in China in the fourth quarter were up 27%.